Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to episode 203 of the AJ Brown Show. Today is September 26th in the heat of market action. My name is Cyprian Francis. With me, as always, Mr. AJ Brown. AJ, good week all around. I feel like economically, news is coming in, markets are moving. What's your big takeaway of this week and where you're seeing the most impact?
Yeah, we've gotten quite a few good economic reports that we'll cover in a couple minutes, showing that there is some resilience in the market. So that's good for everybody across the board. Investors, they're on the other hand wondering what the Fed is going to do next, and you can see it in the VIX edging up, which means investors are kind of hedging their bets with options. You could see it in the price of gold. Gold is at all-time highs, 3,800 plus per ounce. There's some strength, which remember with the market, sometimes bad news is good news and good news is bad news.
Yeah, and we talked about that last week and the balance of the Fed with employment and inflation. And this week we've actually had both news on both fronts, with today being more of the inflation, yesterday being more of the employment. And I believe the consensus is they're both pretty good reports, not swinging one way or the other.
Yeah. And we also got our final numbers. I'm pulling up my magic marker here. We also got our final numbers on GDP for quarter two, and they actually surprisingly popped up a hot amount. So let's take a look at that first. So GDP popped up to 3.8%. Prior, which was the advanced numbers, there's I'm sorry, not the advanced numbers, this is the preliminary. First, they give you the advanced numbers. Then they get some more datas and they revise that number and give you the preliminary number. And then in the final month, they get everything they've got and they put it together and they give you the final number. The final number is 3.8% versus 3.3%. That's a 0.5% higher. And so as soon as that was released, a whole bunch of folks, who otherwise were turned off by US bonds were like, hey, the US isn't doing so bad. So they took money out of equities, put them into, secure bonds, especially if the US isn't doing so bad. So that was some good information regarding the U.S. economy. Then, of course, we get our weekly report on jobless claims, and our jobless claims this go around were not as bad as they have been. And so, again, that's good news. It means that the labor market might not be as weak as some people thought about. Remember the Fed last week dropped interest rates by a quarter point, and the reasoning is that they're focusing on making sure to shore up the labor market. Well, this week's unemployment report, which is probably one of the more accurate reports. I mean, we've made it here in the US so process oriented in order to collect an unemployment check that there's a lot of good data that is gathered versus, for instance, some of our employment numbers that come once a month. those are coming from surveys. Who knows if the individuals or the corporations return their surveys on time? We don't know if we have the statisticians, especially with budget cuts in the Bureau of Labor Statistics, in order to cull that data. Whereas, the unemployment, there's a system, there's a computer in place, and there's literal reports and analytics that you can pull. It's not just, surveys and statistics. So that number showed that this week unemployment seems to have kind of shored up a little bit. And then today, personal income and outlays, which is what Greenspan and others really like to use for inflation numbers. Well, I'll just show you. First of all, on the raw numbers, the personal income and the personal consumption, it looks like it kind of ticked up, right? That it's getting a little bit out of control. Then you take a look at the PCE price index. That's where, out of the raw numbers, they focus on kind of those. They apply some correction factors, and it shows that it ticked up a little bit, and that was expected, right? They expected it to tick up a little bit, and it did, by the amount that they expected. And remember, when you're looking at this monthly number versus this annual number, this is kind of, in my way of, like, the monthly number is almost looking through the windshield of the car, and the annual number is looking through the rear view mirror, right? So this 0.3 that we have, if you kind of extrapolate it and say, okay, what if we hold at 0.3 for the next 12 months? It comes out to 3.6, right? And remember, the Fed's target that they're always talking about is 2. So you'd rather it be 0.2 every month than 0.3, right? 0.2 would extrapolate out to 2.4. So, this is maybe not the best news for inflation. When you come down here to the core numbers, well, the core numbers, that's where we factor out things that are very volatile, like the price of gas, the price of milk, the price of eggs, things that go up and down in price depending on, did the birds get sick this week? Did we have, something going on in the Middle East that caused the price of oil to pump? Did we have a storm that caused? So they take out all those volatile components so that we get an idea of just the solid, more stable measurements, and that's doing pretty good. So what does this, as summary, say? It says maybe that things are a little bit hotter in inflation, but just a tiny bit more. And so when you combine that, where you've got good GDP, at least for quarter two, we're already at the end of quarter three, but good GDP in quarter two, you got better employment than you thought, and maybe inflation is starting to heat up again. What that comes down to is the idea that the Fed may not drop interest rates like we thought in both October and December, which I'm sure in the next we're going to hear from the president, who wants, the Fed to juice the economy, to drop interest rates. We're going to probably start seeing the rhetoric ramp up again about how the Fed is untrustworthy and so on and so forth. Because, if you take a look at the expectations, this is for this upcoming October, end of October. This number has dropped. If we take a look at what it was when we met last week, 1 week ago, this number was at 92%, and it's down at 87%. Still, everybody believes the Fed's going to drop rates next week, or in October, end of October. But that number is coming down because things are strong. Employment's not so bad. And if inflation is starting to heat up, the Fed will not want to drop rates. In fact, they'll want to raise rates. So, yeah, I see this number going down. And then the December number really dropped. This number was up at 80%, and now it's down at 65%. This is a drop right here. This number that was down at 20% is up at 31.5%. And means that the Fed will just drop 1/4 point in October and not anything in December. So, I mean, it's maybe too soon to say, but the tides are turning towards the Fed kind of holding steady rather than dropping rates.
Yeah, and it's kind of like this. I just lost my train of thought of what I was going to say, but it's like the concept of recession is off the table with those GDP numbers, at least until we get our next set, and that means that the economy is chugging along. With as long as we don't get sways in the economic news too much one way or another, it seems like the market's gonna just keep chugging along. And you just pulled up the S&P, and I was just looking at we did hit all-time highs again on Monday to start the week, pulling back this week, but like we've discussed, that might actually be good for the long term because we need a little bit of breath of fresh air. So, what is your take on that?
Yes. Yes, I've been emphasizing it since this trend started back in April 8th, right? And I've been like saying, it's not healthy to have the pullbacks be, less than stellar. You want the pullback to actually pull back to about halfway each move up, each expansion. And that way, when you do expand, you've got that rotation of funds. And so we've kind of been weak in that aspect. In fact, let me pull up my rainbow chart here. And so here we are. Monday, exactly right. We got a high. And then because of this strength and because of this good news that employment may not be as big a problem as we thought it was. In fact, inflation may be. And that good news is telling us that maybe the Fed isn't going to juice the economy. And that's been making investors sell off. In fact, even today's price action, this is what we call a Lincoln's hat bar. It kind of looks like Lincoln's stovepipe hat. It basically means that investors drove up the price of stocks this morning on some sort of news. I think that they were initially saying, oh, congratulations, PCE isn't that bad. And then they're like, but that means that the Fed won't want to juice the economy. And so investors went back to selling off. We'll see if this winds up being a lower close than yesterday. But yesterday, we definitely got a confirmation that Monday was a reversal. And so you can see we're looking to see how far we go. And like I just said, you're right. We like the pullbacks. The question is how far will we pull back? Will we pull back enough? Will we over pull back? So, for instance, some targets for you guys listening to the show: 6,520. Exactly, it says 6,521.82, but let's say 6,520. That would be too far. If we go below 6,520, we're no longer going to be calling ourselves in a uptrend. We're going to be more into some sideways trading, right? If we go, write this number down, 6,415. The exact number I have here is 6,415 and 54. If we go below that, well, now we're getting into reversal territory. We're getting into a new trend being defined. And then for sure, the last number I want you to write down is 6,350. My exact number is 6,349 and 88, but just write down 6,350. If we dip down below 6,350, it means we for sure are in reversal territory. So we want to see where we fall. If we just fall into this magenta zone that I have here, well, then that just means that we've pulled back enough to give another move forward in a new uptrend. So that's what, for those of us trading the trend up, that's what we want. If you're trading premium, if you like the sideways choppy, you'd like us to be in this red zone. And if you're counting on a reversal, you'd like to see us drop down into the green
Yeah, this
zone.
whole concept of good news equals bad for the market, bad news equals
Yeah.
good is always hard for me to grasp because, like you said, you want to cheer for the tameness of these reports, but the juice, I guess, is the biggest factor in price action and why things will move up and down. And yeah, and then the new Fed guy was talking this week, right? And he seemed to be very optimistic about cuts and stuff. The new Fed presidential installment. I don't know if you caught that, governor's speech or whatever they call those things.
There's been a lot of governor speeches, and his is definitely the extraneous point. I have a dot plot and the dot plot is something that a lot of economists look at. It shows what each Fed governor, whether they're on the FOMC meeting or not, voted as far as interest rate hikes and drops at the last meeting, as well as their expectation. There's a second dot plot as their expectation for the number of drops for the year of 2025. And this guy, his dot is like out over here, and the rest of the Fed people are in this grouping. But we've got a new Fed person being nominated in April of next year. um, we're still watching, the Supreme Court. There's an emergency appeal from the Trump administration to the Supreme Court about Letitia, who is the Fed person that Trump wanted to fire, but the courts put a hold on that. So both she and another one of Trump's appointees were in the meeting at the same time. So it's very dramatic. It's like a soap opera as the stomach turns, if you will. But well, the scoop is yes, that guy is out here, but you never know what's going to happen with the Supreme Court and the way that the Fed is either kept independent or starts to be more swayed by political. But yeah, this one dot was out here. So I did catch some of his sound bites. Um, right now, he's a minority, but he could become a majority before we
Yeah,
know
that
it.
was actually I was watching the market. That was a double punch because he was speaking, and then I think Nvidia came out with $100 billion investment in OpenAI,
Open AI.
and like that was just a lot of positive juice, to the market, to start the week, which is kind of what ran the
And
market
then
up.
exactly. And then on Tuesday, all that gains that Nvidia had on Monday were given right back. So, the market can be quite fickle with some of this, like, news. I call them transient external stochastic shocks. These little, like, put it out in the news and then everybody gets excited and then reality sets in and it just it's quickly
And they
overturned.
move
So
the markets because there's such a large percentage of the major indexes, and so everything kind of goes with it. However, you and the team at Trading Trade, we try and avoid the names with the news headlines, Nvidia being one of them.
yeah, it becomes a pump and dump, man, and I don't like I don't mind watching it, but I don't wanna be involved in it.
So before we dig into some other stuff, let's pull up the VIX too, because I know there's a strong
Mhm.
correlation there, and that's something we discuss every week. And you're seeing a good opportunity to take a look at it again.
Well, I mean, we talked about it last week. So last week I got my signal, I got in, and sure enough, so far my position is going to be doing a little bit probably better. It's creeping up, and it really depends on what happens like next week. My position, I actually have it out till October expiration, so it's going to be there, but I can close it at any time, especially if the market shoots up or the VIX shoots up. The VIX, of course, is a measure of the unexpected or perceived. Let's use the word perceived. The perceived uncertainty in the markets, right? And so you see the VIX go up when people are hedging against you know, expected surprises in the market. And so the VIX has been edging up, but let's put it into perspective. Yes, the VIX is off of its recent, lows. Its recent lows is around 14. And so that's as calm as we've gotten. Remember, when the VIX gets low, it means that investors are calm. They're kind of looking at the long term. We've seen, during, and again, not political here, but during the Biden administration, a lot of times it was down around 12. Ever since we've been here, we've been kind of finding a low around 14. So kind of a step function higher in uncertainty. That might be because of, the changing tariffs, the not being able to, uh, place any sort of certainty on the long term about what's going to happen next. But it's been around 14, and 14 is still low, right? When you take a look at my dotted line, which is a best fit trend line since the beginning of the VIX, which is 1985, it's around $18.90. So we're not even at that mean. And I've got this other line that I've drawn at 26, right? 26 is where I've got my founded, unfounded fear threshold line. That's where all of a sudden the fear that we may perceive, or the uncertainty that we perceive, actually plays out in there's actually something happening that's like the earthquake is here, versus we may get an earthquake soon, or we think there's going to be an earthquake soon. When you get above 26, the house is shaking, right? We're nowhere near that. We're trading at $16, $16.50. So risk uncertainty is still lower than it has been. It's just been trading higher, especially in the last 2 weeks, than it has been over the last 3 months. So keep that reference in mind here. But yeah, I've got my VIX hedging trade in place, and should something happen in the next 2-3 weeks where the proverbial poop hits the fan, I'm prepared.
Yeah, and that's kind of what we've always been discussing, is that the risk to reward is very clean here, because you don't have the ability to lose out so much. You're really more likely to break even or protect yourself, is if something happens. And that could be some tech news, that could be an assassination, right? Those seem to be coming around these days. It could be a tweet, which I have a tweet that I think we should discuss. So these are all things that can
Sadly,
move the
yeah.
markets. And if you're an investor and you've never considered putting this strategy on, AJ, we pretty much bring this up every week, but it's there to protect a lot of the other things. And sometimes when we have a new set of tariffs, we'll hit the 60 mark like we did earlier in the year. And so you want to be just able to protect yourself and take advantage. So that's one of AJ's favorite setups, is the VIX trade. All right. So
Yeah, the VIX hedging trade.
yeah.
It looks like this. For those of you that are nerds out there, it's basically a credit spread and a debit spread, a vertical credit spread, a vertical debit spread. And the idea is, if everything stays cool in this zone, you're going to do just a little bit better than break even. The idea there is, should something happen, should the proverbial poop hit the fan and the VIX shoot up, that's when this trade, goes to this next step function up, and you wind up, basically offsetting any other losses in your portfolio. So we love putting on the VIX hedging trade anytime we get a signal down at the end, down at the bottom.
Yeah, and we've got a good number of examples of these on the YouTube channel. So if you head on over there and just search VIX, you should be able to find like 10 plus videos of examples and layouts. All right, so at this point in the show, we've been experimenting with some new things. Still working on our flashy title card, but we did start this new concept, the morning sip, where we kind of talk about what's happening in the news or in pop culture that may have an effect. And I did mention that there was a tweet overnight this morning that's kind of hitting the headlines that's affecting certain industries. I don't know if you were able to catch this, but let me go ahead and pull this up on the screen for us. But our lovely, President Donald Trump this morning must have sat on a couch that felt uncomfortable or something, because he went ahead and tariffed the industry. So this is quote unquote from the president. Starting the 1st of 2025, we will be imposing a 100% tariff on branded, patented pharmaceutical products. So that's the pharmaceutical one. There is another one on the furniture. So 25% on heavy trucks, 30% on upholstered furniture, 50% on kitchen cabinets, bathrooms, vanities, and related products, and 100% on branded and patented pharmaceuticals, unless they are being manufactured in the U.S. And so some companies were hit pretty hard. Some of the bigger ones that are starting their manufacturing in the U.S. weren't hit so hard. AJ, did you see this come out? Did you get any thoughts on it? I mean, it seems as if Trump is just continuing the playbook that we saw from April, and he's just going to hit every industry as he can one by one.
Yeah, I heard rumblings of this. I didn't see this tweet specifically, but it's going to result in some tumultuousness in the stock market. It's going to, I can just think of all the seniors that are now going to have problems. I wonder, is Tylenol going to go up in price, especially since Tylenol apparently causes autism. And so maybe there's a whole bunch of people not buying Tylenol now. We'll see. And then the whole thing on furniture.
Let's see if I can find that exact one.
Yeah, that it's really going to be.
Oh yeah, here we go.
It's going. Talk about a strategy. If you want the Fed to lower rates or raise rate, I mean, talk about a strategy that will probably result in people losing jobs and at the same time prices going up. Talk about a confusing thing for the market and investors and the Federal Reserve to figure out.
Yeah, the jokes I'm seeing on
bathroom vanities.
They're just like, oh, did he step into a room with some bad drywall or whatnot? And then the other one that I keep seeing is it is very unfair practice, and we must protect for national security and other reasons. So now there's all these memes coming out of furniture being like, a national security threat. But maybe it is one of these things where, it comes down to 10%, comes down to 15%. Local manufacturers start to have to, or businesses have to start to look locally versus, it's the same playbook for these different industries. And, these just come in the middle of the night and you never know what's going to happen. Right. So,
and you never know how long they're actually going to last, right? The taco trade. Is it just hot air? It does move markets. And so the other question is there's the case stuck in the courts about whether these tariffs are even legal. Will the Supreme Court be able to finally give us a final thought on these tariffs? Should they not be something that you can just tweet and then change on the fly? Should they actually be something that Congress has to vote on, which would slow the process and make it more deliberate? This might be some of the final straws that force public perception to get a final ruling on this. I don't know, but I know that as an investor, it makes it hard to figure out. I mean, does upholstered furniture include upholstered car interiors? What are the specifics? It's not just that easy as putting it out in a tweet.
And some I don't know if you want to pull up Restoration Hardware, RH, but there's a few names that are getting slammed off the the news, and they probably didn't see this one coming, right? And that's a lot of these businesses and names, and that's why the VIX trade is a good strategy, because who knows what news is going to move what, and get things out of whack. But that's our morning sip. Trust me, guys, they'll get more exciting. It is a new segment. We'll try and keep it fresh for you. But let's keep the party going. We are streaming live, so if you guys have any questions, names, ideas, comments, feel free to throw it in the chat, and we'll try to get to it as soon as we can. Once again, let's go ahead and get, I've been streaming this banner at the bottom for the show. But once again, guys, if you want to get access to some of the cool stuff that AJ is talking about and reviewing, we've got it all available on the quick links page. Go ahead and follow us on these wonderful social platforms. TikTok, which should soon be a U.S. entity. That's a hot topic for this week, and next week maybe we'll dig into it a little bit further once they finalize it. AJ's free indicator suite, you'll see those arrows on some of the charts that AJ is referencing. You can go ahead and get access to that for yourself. And then the free daily workshop for these premium selling strategies. If that's a new concept for you, this is a wonderful place for you to check that out. More about Trading Trainer in general. We've got custom coaching. All these goodies are on this quick links page. So head on over there, sign up for whatever is exciting for you. We are going to take a short break, and then we're going to dig into AJ's pick of the week, and then we've got some speed round names, and then we'll get you guys set up for the weekend and set up for a lovely week of options trading. So sit tight, folks. We'll be back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. So your pick of the week this week, AJ, is a name that has been on the team's watch list for quite some time, and I guess that's a good thing, because you're continuing to find ways to get in, get out, get in, and it's following a lot of the things that you discuss and teach in the program. And so that is Bed Bath and Body Works, ticker symbol BBWI.
Bath and Body Works. Yep. Yeah, Bed Bath and Beyond and Bath and Body Works. Yeah, I just wanted to give everybody a heads up. This one has outperformed for us as a premium seller. We've been able to get in, get out, be able to collect multiple premiums. Some people have rolled in, rolled out, and still been able to do some big profits, whether or not you got exercised out of your initial covering position only to put it back on. We're at a point right here, and the reason why I'm featuring this again, where a day now you're going to get your follow through or signal and follow through in order to get back into this position if you're not already in, or you can add more. So we're looking for a solid. I'm going to switch over my indicators. For those of you that use my indicators, we're going to go to the fast MACD, and I particularly like to calculate my fast MACD on volume weighted average price rather than just close. It kind of filters out and gives you a little bit more confidence. So you can see I got this entry signal and follow through day just on Monday and Tuesday, but there's still opportunities to get in. So you're either going to be buying stock, and you're going to be buying this Bath and Body Works in lots of 100 shares, or there is an option, and I've been using my options lookup tool in order to do this. If you go out to May of 2026, you could also do June of 2026. If you want a little bit more time, you can find a substitute option. I'm looking at the $15 call, whether you do May or June of next year. the $15 call, and that thing's trading for the May. It's trading at about $11.40. If I take a look at the actual price right this minute, May 15, it's actually a little bit cheaper. It looks like it's trading, oh no, it's about $11.50. If you're looking at the June, it's trading also $11.60. Either one of those, maybe that extra 10 cents is worth an extra month before expiration on that. But this would be a good substitute option. It's less than half the price of the stock, and it'll leverage pretty well. And then you just wait for it till we get our next signal and you start selling premium along with the rest of us. But we're just at that point where we're getting really good entry signals for long or for going long substitute call options. So I just wanted to point that out. I think that Bath and Body Works has been working out for a lot of my team as well as me. So I wanted to let people get in on that.
And definitely probably on the not so news headlined names. I mean,
although we'll see with this furniture,
guess.
although Bath and Body Works isn't so much furniture, but we'll see on that particular front, see if it gets affected by any of these new tariffs.
Well, there's a opportunity for you guys. We'll keep an eye on it. Maybe review it if things go our way, and maybe review it if things don't, because they're not always going to be winners. But we wouldn't bring it up if there wasn't some good probability here, and it has. If you look back a couple weeks, like, it's just kind of setting up beautifully. So that's what AJ and the team likes this week. All right, we've got a couple of other names, some names that we do cover frequently on the show. So this is probably a good thing in that our viewers are finding these boring names that have consistent opportunities. So let's see if we can find some winners in our speed round this week. So we'll start with Lisa in Ann Arbor, Michigan, interested in Sentinel-1, ticker symbol S. This is a name that we've covered on the show frequently.
Yeah. Sentinel-1 is another one that is worth our focus. Look, it's at a really great price, meaning it's affordable for a lot of our portfolios. And I guess you're wondering, I see that there's been some confusion on our signals here. So we got a top signal on the evening of September 10th, only to not get the follow through the next day to place the trade. And at the end of the next day, we got a canceling signal, which basically said, psycha boo boo, that's not the top. And then we got another top signal on September 12th. Again, maybe you got some interesting follow through. I'm not sure on September 16th, only to have that reversed again on September 18th. Well, we've got another signal. I bet you're wondering, are you gun shy? And I can see that this probably was not the best follow through signal. Same with September 26th. And again, if you jumped out on September 16th and you're worried about spilled milk, I don't think you have to be, because it looks like this will probably play out for us. So I guess, Lisa, I'm not sure why you submitted this, but I think that is probably because you've been, bounced back and forth by these signals. And my answer to you is make sure you trade exactly what you see. So trade the end of day signal and the follow through. If you don't get the follow through, don't go into the position anyway. So stick and be disciplined to your rules on how you see those indicators. And if you did, sell premium, buy protection, if you did jump out of the trade over here, don't worry about it. It looks like that was the right thing to do. If you're looking for a signal to get in, I would actually say or offer to you that if you, now is the time to short. And I see how it could have been whipsawing you, kind of, bouncing you back and forth. But again, wait for the follow through. But if you get the follow through, you're going to short Sentinel 1 in lots of 100. Let's check our options lookup tool to see if there is a substitute option out there for us on the put side. So we would substitute shorting the stock with a put option. We want to go out. It looks like the June 18th option is the one we would be looking at. It's far enough out in time that we'd be able to sell some premium. And my eye goes right to this $27. You could even get by with the $25 put. Either one of those, $25 put, $27 put. The difference in price is almost $2. The 27 put might give you a little bit more peace of mind, but I think you can get by with the $25 put. And these don't expire until June of next year. So instead of shorting the stock, you could buy some of these put contracts. It'll behave the same, and it'll be at a fraction of the price of shorting the stock. So you might consider that as well. But again, only do it when you get your follow through to the signal that we got on Wednesday. And I don't see that we got follow through yesterday, and it doesn't look like we're going to have follow through today. But, that's what you're going to do. You're just going to stay disciplined with your rules.
Yeah, and as a reminder, Sentinel One is a cybersecurity company out of Mountain View. So I would imagine that they're handling business for some of those big tech names out there. So that's one of the names that we're looking at this week, Sentinel One.
Sentinel One, it looks like it's a great premium trade, meaning it's in this sideways channel, but I can see why it's frustrating because look, the signals are not clearly, right here we had a clear signal of a top and a bottom, but the rest of the signals, here's a good top signal. But the rest of the signals have been kind of giving you a little bit of agitation, but just stick with your rules. Use your end of day signal with follow through and then just follow it. You might get bounced a little bit. You might do some transactions, but it turns out it looks like because the macro picture is this sideways channel, it looks like you're still going to work even though you might, have a little bit of agitation. It's just it comes with the game.
For sure. All right. Thank you for that, Lisa. We'll keep an eye on that. Moving on to our second name, Christy out of Columbia, South Carolina, wants to know your take, AJ, on CMEX, ticker symbol CX.
One of our swing trades.
Looks like it.
Yeah. So let's see. I'm going to throw in some additional indicators. You guys might want to follow along. So the first thing I'm going to do, I see I've got my best fit trend line. I'm actually going to extend this sucker a little bit and see where we are. I don't think it's going to change much. Yeah, it didn't change much at all. And we've also got this one. Let's see what that one does. If I can grab it, there it is. Yeah, that doesn't change much at all either. So what I'm going to do as far as adding indicators is I'm going to add a 30-day simple moving average. That's going to help me determine, do I like the trend still? If the 30-day is still appreciating, and even better, if it's matching my best fit trend line, which it is, it's kind of running parallel. And I would expect with this pullback that it would flatten. I want to watch the 30-day and make sure it doesn't flatten or start to go back down. But I like the trend, and that's what you need to have in order to have a swing trade. I see so many people trading swing trades, and there's not a good trend, and they wonder why the trades don't work out. So you have to, test for trend multiple ways. And then we look for a healthy pullback. So the next indicator that I'm going to recommend you use is Larry Williams's Williams percent R. And when you use the Williams percent R, especially for this type of template, use Larry Williams's daily. A lot of these charting softwares, Thinkorswim is the one I'm demonstrating on right now. They pre-program the default settings for day traders. And what you want to do is change the length to 14 And then in order to really find good signals, we're going to go overbought at -10 and oversold at -90. And so now we'll see whether or not we've got a healthy enough pullback to get a good swing out of it. I would have loved to see this pull back all the way below the -90. It got as low as -85, -86, 86.4. Yeah, 86.4. Oh, it stayed at 86.4 for 2 days. I would have loved to see it go below 90, but this is probably good enough. If it does take a double bottom and goes below 90, I'd be that much happier. But I could see letting this scrape by. So the last thing you're going to do is look for an entry signal. And I'm going to give you one more, especially if you've downloaded my confirming moving average indicator. Throw on the confirming moving average indicator, change the first setting to 1 in simple and the second setting to 7 in simple. And that's a great signal. It's an end of day signal, so you'll want to see follow through. But when you get your green arrow, especially if it turns south and goes below -90, it would be even better. And then you get a green arrow. Once you get your green arrow, that's your end of day signal. Look for follow through in the subsequent days to trade up. You can buy the stock. This is a cheap enough stock that you could buy the stock and then wait for the exit signal. You could use trailing stops. You could use technical stops. It's just a swing trade from bottom to top, or you could leverage an option. We actually did a class this week on how to pick the option to leverage. But if I was to go just off the top of my head for a CMEX option, I'd probably think about either this January or even this April option. Let's look at the January option. I would probably use this January $7 call. I could use, there's a whole bunch of different options I could use. I could go deep in the money and even go closer, maybe November, or I could go out of the money. That's kind of a fun trade too. But if I was just a plain Jane person, I'd buy some of these options at $7 and I'd, only invest as much as you're willing to lose on this particular trade.
Yeah, I'm curious your take, AJ, on the correlation of interest rates in the construction industry. As interest rates go down, is that a boost for the construction industry?
I don't think that we would see, especially in CMEX, which is a focus on cement, you would see an instant bump, right? Because this is not like, I think you'd see that more in like the home builder stocks, like Toll Brothers and things like that, Ryland Homes, tickers like that. I think CMEX is so low on the supply, and cement is used in so many places. I think CMEX is actually being affected by more broader, and I actually see the rise up in CMEX kind of from the bill that came from the prior administration. Remember, there was this huge bipartisan infrastructure bill, and there's a heck ton of concrete going into these bridges, into these roads, into this infrastructure that's still being funded by that bill from 4 or 5 years ago. So I think that that's what we're seeing with CMEX. I'm not sure that an interest rate bump or drop would affect CMEX, but it would affect like the actual home builders, the residential home builders.
CMEX, multinational, 50 plus countries is what I saw out of Mexico. Yeah. So maybe their revenues are tied more to global changes than just what's happening in the US. But thank you for bringing that to our attention, Christy. Moving on to our third and final name, a name that I believe we've covered even from the very early days. So Richard out of Columbus, Ohio wants to know what's the play in Ford, ticker symbol F, if anything.
Yeah, let me, I got so many indicators. Let me clear my indicators here because Ford's an interesting Yeah, I still look, even when I go to the bare minimum, it's so Ford is consolidating. Ford is one of my favorites. Both, I got some Ford products, as well as I've traded Ford forever. But look, what we got here is called a consolidation. In fact, today looks like we're breaking out from the consolidation, almost like a textbook. You'd have to go and check the news on what the heck is happening with Ford today and what has been the buildup. But look, you've got definitely a level of resistance around $12 that has formed. And then you had this ascending level of support that then leveled out at 11.5. This is such a tight channel. It's basically Ford investors saying, hey, I'm on the edge of my seat. I don't know whether I should be buying more or selling more right now. So I'm going to sit on my hands, but every day that goes by that I don't know the answer to the question as to whether it makes sense for me to buy more or whether it makes sense for me to start selling, I'm going to get more fidgety and antsy. And usually you see this leading up to some sort of event or headline or new product release or something like that. And it looks like we're breaking out. Usually the strategy that you trade with this is some sort of straddle or strangle, because a straddle or strangle profits on whether price moves up or down. The only time straddles and strangles don't profit is when price stays where it is, right? So when you see this consolidation, which usually makes you think of a pending breakout, you would throw on a straddle or strangle. And depending on whether you're throwing it on to take advantage of, that fidgeting and agitation that people get, the longer that there's, that it consolidates, you can set up a straddle and strangle to profit on that. That's called trading the smile curve, or the actual breakout itself, the directional move. You would optimize the expiration dates of the options that are in the straddle and strangle, as well as the strike prices, depending on how you wanted to trade it. But that's what I would do here. And it looks like if today we didn't get the breakout, it looks like it's getting ready to break out up. But a lot of times when you see this initial breakout up, it could be followed by a breakout down. So I wouldn't just be jumping in trying to trade calls on this. I would be trading some sort of breakout strategy. And I wish that I could tell you that it's time to trade premium on this, but premium trades would actually go, the Achilles heel of premium trades is breakouts, right? You really don't want your premium trade to suffer a breakout, especially if you don't have the collar on, the premium sold and the protective option bought, because that could make or break your premium trade. So it's not the time to do premium trades. It's not the time to trade trends on this. It's the time to trade
Yeah, and I'm
breakouts.
just looking at the news, and it's a little confusing because yesterday or the day before, record recall, 115,000 on some of their trucks. But
Yeah.
today, the news headline is establishing new subsidiary in China. So that's the only thing I can find that would be driving the stock up. With that pop right there, but you make some good points, AJ. I do think this one is susceptible to the news, but it's never like it never moves in a crazy price range just because it's like at this $9 to what $12, and if you zoom out, it's probably been in this range for quite some time. I mean, I don't, they've kind of just been around for so long and not as innovative.
Well, and you got to remember, Ford's an interesting company, though. Ford, if you go back about, gosh, it's more than 15 years now. If you go back 15 years, Ford was the only American car maker that didn't take a bailout out when all the car companies were, under GM. Definitely took a bailout from the Obama administration. Chrysler wound up getting, part of the Stellantis, the Italian company that makes Fiats, is now kind of the owner of Chrysler. And for a while there, Chrysler was with Mercedes, right? So, Ford has always kind of marched to the beat of its own drum. And, in the whole face, all these car companies have been abandoning the EV play, with the new administration kind of being anti EV and more pro fossil fuels. Except Ford just released and made an announcement about a whole new platform that's pure EV for affordable mid and small size pickup trucks and things like that, and SUVs. So Ford kind of just it exists. It's never been quite independent. It's one of the reasons why I'm attracted to Ford. When I can sell premium on Ford, I do, and I'm a fan of the company. I just right now it's difficult to trade the stock, but once it establishes some sort of channel or something, I'll be recommending to jump back in. You might see it as one of my picks of the week, but not right
Yeah,
now.
hopefully that was helpful, Richard. Another EV that I see a lot of on just the streets around is Rivian. They're tending to be very
Yeah,
popular and modern. And I was actually sitting in. You might appreciate this. I was sitting in traffic earlier this week, and lo and behold, Seth Rogen pulls up next to me in his RV. And if you don't know, I think his show, the studio, just like broke a bunch of records for
it
Emmy.
did. Did you
Oh, it's
watch that?
fabulous. If you haven't checked that out.
Well,
Yeah.
I got maybe it's a slow start. I watched the first episode, which was really long, and then like the second, and then in the third episode, I just maybe I have to stick with it because I kind of was like, this is
I
this
I
is
think
this
it's
is
more of
hard to
like
follow.
like film people like it because it kind of gives you the behind the scenes of like, the movie biz and stuff like that. So
Yeah. I like that the guy that was in Breaking Bad and in Malcolm in the Middle is in it as kind of the tech entrepreneur that purchased
yeah,
the
Bryan
network.
Cranston. They make
Bryan
him be
Cranston.
very exotic, even with his like flamboyant attire and things like that. So
Yeah.
I attest to many of those scenes being quite accurate, just in my day to day life of the people
Yeah, in your
the
LA
people I
life.
run into. All right, so that's our pick of the
So he was in an RV or he
in a
was in a
In a
Rivian?
Rivian, yeah, and like that's starting to become a little bit cooler than the Tesla truck, uh, right? People kind
Yeah.
of are starting to like when they see the truck, this Tesla truck, but the Rivians are like kind of like more of like a Range Rover style body look to
Yeah,
it.
and they've got a very unique headlight. I told you my wife is like coveting the Rivian SUV. I looked on the inside and I'm not sure I think it's quite small on the inside. And I said, before we jump in on a Rivian, maybe you should test drive one and see
I've
if you
never
like
been
it.
in one. I just see them around more often than not, and it seems as if their team is like their CEO is giving some good interviews, and they're an American company, so that's good to see.
Yeah, and I'm wondering they apparently there remember we broadcasted on this show. They did something, they got some sort of deal going with Apple, but I'm not sure how that played out. And
Yep,
Volkswagen,
like a
didn't they
big
do
investment. Yeah,
and but
haven't heard much since.
I see the numbers of them
Yeah,
like increasing on the
that's
highways.
probably a good thing for business. That's not so much in the news, right? And then another
Yeah.
cool thing is the Tesla diner. I know have you've seen the Tesla that they it opened not too far from me, the diner where they have the
Oh, is it like a supercharger slash there's movie theaters slash it's a whole
yeah,
experience?
and it's 24/7, which is like kind of wild, but there'd be some days when I'm up early in the morning and then there's people in there and it's like, you know, it could become a thing nationwide. I imagine it being more of like a let's go here and hang and charge our car and eat.
Yeah.
And they have the Optimus Prime serving popcorn. Like I kind of want to go check it out, but I don't have an EV, so like, not really a customer. So it's you know, I just know, yeah,
That's interesting. I know that they're because Ford apparently has a is a partner with Tesla because they sent me an adapter in the mail when I bought my truck, and we just took that road trip from here in Washington D.C. down to Asheville, North Carolina, And, there's Tesla superchargers everywhere. I have a friend who has a Volkswagen, I don't know what it's called, but they're not allowed to charge at the Teslas. And he also made that road trip and was complaining about, he'd show up at his charging places, and, half of them would be out of order, and they were like in dingy places. All the Tesla ones are and the Tesla ones are very powerful. My truck, which is a big battery, takes like 25 minutes. By the time I've got the little one unbuckled from her car seat, we're already charged. So I think that would be great to make it more than just a charging site, but have places where you go and it's a destination.
Yeah, and where they put it is in a very affluent, trendy, like it's on Santa Monica and like La Brea, which is like, on your way to Hollywood and stuff. So, they're checking a lot of the pop culture boxes.
Weren't there complaints about, that diner is going to be using as much power as like Huntington Beach or something like that?
I didn't see that one, but I did see that they put a giant movie screen like behind people's balconies, and it was like, they were a little pissed.
I'm sure that pissed people off. Sure, although they can now just sit on their balconies and watch movies.
Tesla probably paid them out, be like, look, guys, here's some stock.
Yeah, maybe. Although who knows about the Tesla stock these days?
Well, one we don't cover often because it moves so much, but
it's so expensive too.
But that should do it for us for episode 203, heading into the weekend, the last Friday of September.
Next weekend will be October.
Back in October, still a lot in the markets. Inflation, employment.
We're officially in fall.
What, today or yesterday?
No, it was a couple days ago, but something like that. I think it changes every year, but we're officially in the season of fall. So that's
all right. Cool. Let's go ahead and pull up the quick links page real quick. Thank you everyone for tuning in and joining us on the show. Head on over to our social channels, show some love, hit that like, hit that follow, hit that subscribe button. You'll get access to the free indicators. You saw, a lot of those, a few of those in some of those examples. Register for the workshop if you want to learn a little bit more about premium selling, if that's a new concept for you. Learn more about Trading Trainer, some custom coaching, and just become a good advocate of the program. We've got good names, good opportunities, a good community, dropping knowledge every week. So we would love for you guys to be a member and to join us. Otherwise, AJ, thank you for your time. I believe we don't really have anything to look forward to next week other than a lot of the things that we've already discussed throughout the show. Nothing, that's too much of an outlier there. As always, if you guys have any questions, comments, or concerns, feel free to throw it into the chat, send us a DM, and we'll get back to you as quickly as we can. Shout out to Steven. Thank you again for your lovely viewership. We appreciate it. And to everybody else as well. That should do it for us. Have a good weekend, everyone. We'll catch you guys next week.
Take care, everyone.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh